Cool. All right, we are ready to go. All right, hi guys. This is George from DoraHacks, and welcome to episode 6 of the Polygon APAC DevX Hackathon workshops. Today's episode will be hosted by Anthony Cheng, partner at Newman Capital. At DoraHacks, we're very happy to host this workshop together with the Polygon team and Newman App Capital to provide some insight into designing a winning business model. For a bit of an introduction, DoraHacks is proud to support Polygon Labs on their latest hackathon, which is currently underway on the DoraHacks.io platform. There's a great opportunity for developers to earn a share of the great prize pool that's up for grabs. And hopefully today is helpful for all developers building, not only in this hackathon, but in general, as I'm sure Anthony has some great knowledge to share with you from his perspective within the VC space. So for anyone in the YouTube or Binance Live chat rooms, please feel free to ask questions as we go, and I'll ask these to Anthony. So without further ado, let's welcome Anthony. Thanks for joining us today.
Thanks for having me today, and I'm very excited to share some of my experience in the space as well as my thoughts and how do you really build a business model in Web3. But before that, I think I can talk a little bit about Newman Capital, as some of the audience might not have heard of us or might not have worked with us before. Newman Capital, we're a full stack proprietary VC fund. So what's the major difference is that not only we invest, but we also mentor and we empower our portfolio with kind of our experience. And all of us, including my partner, my associate, everyone is from an operating background. So we kind of praise ourselves from being full stack all the way from ideations to engineering to product development to go to market. So it's a sort of end-to-end pipeline that we work on. And some of our investment, obviously, it's Polygon and close partner of Polygon, Immutable, and we have Orb Labs, cross-chain messaging. So a bunch of companies that are both from infrastructure but also from a B2C layer. And our fund major thesis is that we look at interactive entertainment. So in Web3, from gaming to consumer creator economy, to social, these are the major verticals that we support, and anything below that, the infrastructure, middleware, APIs, any services that would help these B2C applications to proliferate, we support and we invest. So that's kind of the brief overview of Newman Capital, and I'm going to dive in a little bit about our agenda today, kind of what we'll be covering and the topics. So we'll start off with the importance of business model, and later on, some of I think the best way to understand business model and to understand what's the best design of it is to kind of look at the landscape of what's out there. What's your option, and third, your growth. So business model is actually a two-sided equation. It's not only just monetization, but it's also kind of your costs, which is unit economics, and most of that are usually factoring in the growth channel. Fourth is how do you optimize that? And at last, we'll talk about some of my notes that I have recently kind of realized, in the last couple of months, and I think it would be pretty beneficial in this stage. So before we start, in not just Web3, but in Web2, people have been talking about growth. All the startup are talking about growth. I think growth is good, and growth is also kind of old. It's an old narrative where Silicon Valley kind of developed since 2006. We'll focus on users, worry about monetization later. But I think from 2006 to maybe 2016, that was sort of the go-to model. But starting from people realizing that, okay, if you go public and your profitability is not there, the business is not making any money, people realize that that's no longer the better way to do it. The better way is to kind of bootstrap it, keep the burn rate low, make sure the unit economics is right, and you're actually making money. So I would say right now, profitability is it's better. It's your go-to, no matter how and what stage of your startup is, no matter how early it is, for all of you guys who are building out there, no matter it's B2C or B2B2C. I think you should have profitability and business model in mind. And of course, saying profitability, saying to focus or have a profitability in mind is not saying that you should not think of growth. It's just that you should think profitability in addition to growth. So what's the business model benefit? What's the benefit of looking at business model? First of all, I think very importantly, for all of you founders out there, you might not be thinking about that, but business model actually empower you to have more bargaining power and take less dilution. What does that mean? You don't have to raise as much money because your company can sustain yourself better, and you have potentially more attractions. And second of all, if you're a Web3 company, most of you guys are, if you are not raising as much money, if you're self-sustaining, you have more control on governance, which means you're selling less token to your users, or maybe you're selling less token to your investors, or just giving up more of those because your business model is not there, because you could not afford to grow, or because you could not be spending as much money. And third one is urgency for product market fit. I think that's like a very artificial sort of like restriction that you should put on your startup or the project that you're working on. Because if you don't have to focus on business model, which means you're not really thinking of charging users the right way. In that case, you're essentially kind of just artificially, getting tractions for users to come. But if your mindset is thinking about business model, then day one, you have to think about, okay, who are my target audience? Who are the people that would pay for my business? And who are what are the right way for them to pay for the business? If you're charging somebody for a product that is supposedly worth $100 and now you're just only charging them $1, you're not thinking about product market fit. You're thinking about growth. So if your mindset is thinking about unit economics, thinking about business model, you would have charged them, $100 day one. And by then you would think about, okay, who are these people willing to, kind of like pay for this product or applications or APIs. Lastly, it's very important, we are in a bear market, both equity and, obviously in crypto. Sustainability is key, during these down cycle. You have to think about, a business model, because you don't know when's the next time you can raise another round of funding. You don't know how people would, think about your company if narrative changes, if hype, tomorrow's meme coin, but the day after tomorrow could be another thing, right? So you have to think about, what's going to sustain your company, no matter the narrative or no matter, the stories out there in the market. I think the ability to focus on business model and giving yourself a little bit of profitability would help, you focus on just building and finding the right product market fit. So that's, I would say, the benefit. And let's dive into, what business model is about. I kind of briefly mentioned that business model is unit economics. When I say unit economics, we break that down into the cost and revenue of your business or product or protocol. And cost, obviously, it's how much do you actually need to spend in acquiring users? And on the other hand, revenue is how much can you get from the users? And this ratio or that or this kind of like mindset is the most basic. And if cost is less than revenue, then you're making money essentially. So high level speaking, business model is about controlling your costs and also thinking about expanding your revenue. So, let's break that down into two parts, right? So revenue and cost. So let's start with revenue. What are some of the options in Web3? And I'll talk about the pros and cons in each of, the options, and who are some of these projects, or what are some of these projects or the nature of the product that you're building would be suitable for some of these revenue. And, before we dive in, I do want to say that I think I keep the best at the last. So I would say, even from my perspective, I think in Web3 revenue business model, there are like, rankings, and which one is my personal favorite. So first, we have the very clear, simple business model, which is one-time fee. What is one-time fee? Essentially, users pay you a fixed amount of money, and then you offer them a service. So what are some of the companies or projects or protocol that are using one-time fees? Very obviously, NFT collections. For the one that are being purchased, not the one that are being just free mint. There's a lot of NFT collections out there, and still right now that are charging people to mint a collections. They could be promising them a utilities. They could be they could be just selling the art. It could be a one of one. It could be a 10,000 PFPs. But a lot of people are charging that one-time fee, and hoping that people would buy their NFT collections. There's second type of one-time fee, which is also kind of similar to NFT collections, but it's more in games, right? So Axie Infinity type of games where you have to spend money to buy a character before you can access the game. Just making an example in Axie, but there are other games out there who are gating their content or game experience behind an NFT or behind an access pass. There's third one, which is sort of like fizzy digital type of thing. I think it could be digital or could be physical digital from what I see. So these are lifetime membership or access pass, right? Historically speaking, I think Trace Sniper was one of the very first platform that offer like a pass, which people could purchase and use their service, right? Whether that's good or not, we could talk about later. But second type is community pass, right? Like ARC Community, which is one of the Singapore kind of like exclusive membership, NFT gated community. They offer like a pass that you could purchase for 3 ETH, and then you could enter the club. They might have like physical events. They might have a lounge. They might have like different kind of like meetup and all that stuff. But those are more of, I would say, the experience type of business model. So obviously the pros of this business model is that the upfront payment can cover a lot of the if you're a tech project in this case, or if you are an experienced project in this case, you have immediate capital for development, and you might not even need to raise money, and covering the operating costs. And most of the time, I think if you're building sort of like this pay upfront business model right now, especially right now, people are no longer really speculating in my opinion, especially in the NFT market right now. Most of the people who are actually purchasing your service or product right now probably are real fans, or at least a majority of them would be real users that are interested in your product, who are willing to provide like more constructive feedback for you. So always getting real users is good. So that's a really good way to think about one-time fee, is that you could essentially funnel down everyone else who are just speculating, or who are potentially just in it for the hype, to the real users, to the people who are actually caring about your community. Obviously there are edge cases if you're building for hype, if you're building it for just for the for flipping or everything, you will get those flippers, you'll get those get those people who are in it for financial gains. But for other people who are building products, that's probably not the case, because they know that it's it's very it's going to be just utilities. And lastly, you are able to capture full value from the beginning. So essentially your LTV is just D0, it's all your LTV, and that's good and probably bad at some time. But I would say, most of the time, if you can capture most of the value in the beginning, you are doing a pretty good job. Obviously, the cons is that it's very hard. This conversion, it's very hard to make, or this business model is very hard to make a case, because you have to build a lot of trust to the users, with your product tractions, with your reputations, with your community and everything. And especially with a lot of scam in the market, it's even harder, because there are thousands of people, projects who are trying to do this, who wanted to rug pull, who wanted to be malicious about selling these stuff. So you're competing against all these noises in the market. So that is not easy to do. And the barrier to entry of costs, although I said that, you are able to funnel some of the real users in, but it will narrow down your funnel conversion, where if somebody wanted to try out your product, they probably couldn't. Or somebody really wanted to use your product but wanted to contribute their value in a different way, they couldn't. So that's the cons. And personally speaking, this one-time fee business model is not my favorite. I think there are probably a niche cases where you could, or your product could, build around that, but I would say probably 90% of the time that's not the case. Transaction fee, I think this is, I would say right now, probably the most profitable business model out there, because crypto and Web3, historically speaking, has the most product market fit in trading. So transaction fee is, very trading focused. You got the DeFi platform, the DEX, the lending protocol, payment services, NFT marketplace, although a lot of the NFT marketplaces are not taking that much transaction fee. So most of these are volume based. You want to build up volume, and you need a large amount of kind of like money flowing in and out of this platform to make transaction fee business model a feasible kind of like strategy for you. And the pros of it is obviously you don't have to pay everything up front. You're only paying whatever supposedly you're spending or trading on the platform. So that's a very easy digest business model. And if your target audience are more on kind of like the investor type, or sort of like financially focused type of audience, this is also kind of a good way to approach them. And second of all, price discrimination for a transaction fee is something that you can build, which is also a pros for this type of business model. What does it mean by like price discrimination, right? Like, I'll use an example on the one-time fee model, or comparison on one-time fee. You have two type of target audience. One could spend $10, one could spend $100. But with one-time fee, let's say your product is $100. You could only capture the audience that are spending $100, but the rest of the people who wanted to spend 10 couldn't. But if with a transaction fee model, you could actually offer the services to the $10 users, because they are only going to spend $10 based on a transaction fee. So you could capture much more value from different type of audience, different type of user profile, or even within the same target audience, different type of willingness to spend. And with transaction fee, you're engaging or you're encouraging usage. You're encouraging usage in a way that you don't have to spend money today if you are coming into the platform to check it out, or you want some kind of like freemium features that you can see, but because I'm not trading, or because I am not spending anything on the platform, I don't have to essentially it's not gated. So it's a really good way to engage users. And essentially, I would say transaction fee model kind of also rides on the freemium model, where you could offer free services before you actually charge them at a certain level. And obviously the cons are, this is very transactional driven. It's it's hard to scale with a platform if you don't have any volume to ride on. And it's very hard to sustain your unit economics if you don't have a lot of volumes, if you don't have like a lot of users, or you don't have whale spending on your platform. So obviously cons is it's variable costs. Most of the time your usage, your kind of like most of the related costs are as at the same time you're increasing your volume, you're also increasing your costs. So most of the time there's a cost peg against how much transaction you can do. And lastly, most of the people in this business, and I used NFT marketplaces as an example in the beginning of this transaction cost model, most of them are raising to bottom. People wanted to capture the most audience first, so you're almost not charging anything, which OpenSea, Blur is not really charging anything right now. So it's very hard to sustain your unit economics if you're not charging anything in the beginning. And with this transaction fee model, you're almost expected that your competitor will cut you to the bottom or cut you to essentially no revenue, and see whoever lasts longer. So this is a risk, but if you're in the market soon enough or have like a first mover advantage, you might be able to avoid this. And if you can build enough barrier to entry or build enough product uniqueness to your platform, this might not be the case, but chances are, if you're working in a bigger market, if you're working in a very competitive landscape, this you almost have to expect that. So lastly, probably my personal favorite, is subscription pay-as-you-go type of business. Although transaction fee could also be, say, like pay-as-you-go, but pay-as-you-go in this sense, what I mean is, kind of like your actual usage on a product that is not financially, tied together. So some of the business that has been using subscription model is research platforms, Delphi, Nansen, Dune. Like those are more of the crypto native subscription data platform. And game passes, I'm seeing more of these Web3 games thinking about subscription or thinking about battle passes that would charge users for premium features with a subscription every month or with a subscription, every certain usage. Obviously, a lot of you guys would be working on infrastructure or middleware, or toolings. Dev tools and APIs are probably the go-to on subscriptions or pay-as-you-go type of model. And subscription, the benefit is that you could offer a much more seamless free trial experience because it's based on usage. You can let users call 100 APIs before you move on to 100 and, before you charge them. And they would be able to get a lot of the work done. They would be able to get integration done. By then, they are already vested or invested into the product to not use your product. So pay as you go, obviously similar to transaction fee model, you only pay if you use. So there's almost, risk-free commitment for your users. It's affordable, because you can, essentially design a product that has a much longer LTV schedule, and you don't have to, charge everything day one. You could grow with your customers. You could actually, upsell them eventually or later on with, better premium features. I'll give you an example, right? So if you are using product A, with free trial, you only have 3 features. So you slowly step with the Web3 free trial experience. They might have hit the cap in, first month, and they would convert themselves into the basic plan, which, include 5 features. And at the same time, you could actually offer them free trial to the pro features, which maybe is, total in 10 features. And, with this kind of, I would say, step up strategy, you can actually move your customer up, along the way, which they would have not been able to do day one. If, let's say, I have to purchase, the pro plan, or I have to purchase this one-time fee pro plan, that is much more difficult, and conversion rate is much lower. And again, similar to, transaction fee model, consistent engagement, because they're using your product every day, or they're thinking about your product, they're getting charged every month. They would want to use your product more, or they would, seriously think about if this is the product that they would be using, and provide like better, I would say better comment, better feedback to you. Of course, there's always cons. They could access your platform. If you're a research platform, they could access your full product, with just portion of supposedly the LTVs. Let's say your product is a lot, it's a research platform. You have 1,000 report, and you spend total of like $1 million to create that 1,000 report. And with $100, which you expected them to read the whole platform or 1,000 report, in probably a year, but now it, supposedly they just downloaded everything and canceled the subscription. That's very risky to especially intelligence platform or research platform, but not so much on dev toolings or APIs. Historically speaking, it's very difficult to set up Web3 native subscriptions, especially for crypto. But of course, we're seeing like more company who are building that, right? More company who offer these services, across different chains. An example would be Sabera, which is one of our portfolio company who invested it last year, which offer subscription for native for crypto native product to take crypto, USDC, every token that you can imagine in the EVM chain. Retention driven is that if you can't do a product that has high retention, your subscription business would not be able to make it. Just because they would try out your product for a month, or maybe even they just do the free trial and they didn't really like your product, or not that they don't like it, but it's not value enough for them to consistently use your product, then they would forever stay on the free trial, or they would just never convert or come back to pay for a subscription. So those are some of the, let's say, cons, but still, personally, I think a lot of the infrastructure and a lot of the dev tooling platform that we see in the space should be using subscription. And here's a sort of like a add-on notes, is that subscription doesn't have to be taking USDC. Subscription could be taking your native protocol token, or pay as you go usage. You could pay for your usage on a different token aside from just fiat or just USDC. So let's move on to the other side of the equation, which is costs. So what are some of the costs that that we have to think about, and where do we do our growth and user acquisition? So very simple. This is again, very high level kind of like breakdown on where we think about costs or growth. Is that simply enough, there's just two buckets, right? Like it's paid or organic, which means you don't have to pay for that. I'll go through, pay first. You see them every day, although you might not know if it's paid or not paid. Like you see the sponsors, you see crypto influencers talking about a product, you see Facebook, Google marketing, or you just see like people doing events marketing or, offline marketing, like out the door. I think in just like almost every single event, I see some form of offline marketing. In ETH Denver, I remember like people having like, crazy banners outside venues. I think NFT New York, a lot of people doing banners, GDC, people doing banners. Like, those still exist. And in some form of, depending on your protocol, it actually is very useful. Organic, right? Community building, pretty sure like most of you guys would be familiar, building your Discord, having direct communications with your users, attracting them, from other community, vampire attack type of community building is also a good way. Social, you built your Twitter, built your, Instagram for, some of the B2C applications, airdrop. That's one of the good way to do organic marketing in crypto space. But if you're one of those B2C application, maybe that's probably, I would say, something you think about later. Product growth. This is more specific to if you're building a B2C product, or maybe actually sometimes B2C product as well, where you do the referral programs, you do the kind of like growth hacking mindset, where if you did something, you create a way for people to share organically. I'll move on to optimization on unit economics. So the very easy way to think about, I would say, unit economics first from your growth channel is that you can think of it as a funnel, where your how much percentage of your users are coming in, or you're attracting or having eyeballs on. And for example, there's 100 users who are coming in from Discord, 100 users from Facebook. You need to know, like, you need to actually segment these users into bucket where you could label them, so you could track your I would say your attributions later on to understand how are these performance doing. And with that, you can see how many of them actually are returning to your platform. You would know, oh, okay, the 100 people who are coming in from Discord, actually 50% of them came back. And then whereas, the other platform or the other growth channel like Facebook or, Google, those pay advertisement, only like 10% stay back. So you actually understand which channel are doing better for you. Or returning you with higher quality users. It's not necessarily some of the times organic users are not necessarily the best, or organic users are not necessarily converting the most, maybe because the way that you target your organic users are different. So it's not always the case. So you always wanted to label and segment and break down them into the most clear cut way, even if it's organic users. So after the users come back, you look at them in whether you're converting the users from a monetization standpoint. Maybe your 50 users from Discord, only 5 of them pay. But however, if the Facebook ad or Google ads, 10 of them stay and 9 of them pay for it, then you would actually think about, oh, okay, conversion rate on that is actually much higher, because they might be in the market to think about purchasing the item versus like the organic users who are in it to kind of maybe see where your product is going, or their willingness to pay is lower. So understanding the conversion funnel, which is step 3, or monetization conversion funnel is step 3. And if you're building a subscription business, or if you're building a transaction fee business, then you have to kind of like look at your paying users and seeing how many of the paying users are thinking about returning every month and continuing the subscription, or continuing the spending of their trading or transactions. Identifying understanding and identifying the segment that has the most spending is your first way to understand your unit economics, because you would understand 2 things. One, which channel has the highest ROI, which, what it means by ROI is like your return of investment. How many of them, how much of the money I spend on Facebook and Google are returning me X amount of revenue? And, is it positive? And if it's positive, how much is it? Is it $10, LTV for a year, or is it, 5? And compare that to let's say your organic traffic or your organic effort. By the way, organic effort doesn't mean that you're not spending any money to work on that. You still have to hire some mods. You still have to hire some people who are doing moderation, or doing like Twitter Space AMA, right? Like you're spending your time. If your time is the money as well, right? So you're spending all this effort, and how much customer you're getting off that effort. And compare, different channels. For the one that is working the most, just double down on those. And for the one that's not working, forget it about first. And find the one channel that gives you the highest ROI or gives you the highest efficiency, and just focus on those. The next step of that, is also focusing and interviewing these, paying users who has the highest ROI from whichever channel, and understand why they're using your product better than other channels, and eventually understand the differences between the 2 channels, and see if you can actually find a better way in whatever other channel. For example, if you are doing organic traffic in Discord off like a Reddit subreddit forum for a certain games, whereas if you're finding out your Facebook and Google traffic, and narrowing it down and seeing that people are paying much more, and you went in and do more user interviews and find out that, oh, they're actually interested in game Y, then you kind of like go back to your other channels and see, okay, can I implement this target audience and this kind of focus or targeting on channel Y instead, or for different other channels, to improve and keep on improving your ROI for other channels. So understanding your channels is one of the most important way in figuring out your business model. And maybe, just maybe, you could also experience or experiment with different type of business model when it comes down to your paying users. I wouldn't roll it out to everyone in your product, but I might roll it out to a specific segment of your users who might already be using your product, and see which business model they're willing to spend more. And that's another way that I would say further down in the future, you could test out and sort of do A/B test it. But initially, I would say find the one from a first principle standpoint that it might work the most or net out the most LTV for you. Kind of like cover on what I was talking about from the previous slide. You segment your users, you optimize on your ROI, you break them down into different features, age, attributions, right? Could be different type of games they like. It could be different type of devs on different ecosystems. So just segment them in the way that makes sense for your products, and identify the events that is driving conversion, even within your products. So, it could be certain events that you're running. It could be certain promotions that you're running. So identify these events and make sure you have them in your pocket if you are needing to, do conversion events. Lastly, kind of like the things that I was talking about, A/B testing, for both monetization model and for step up. So to do step up is kind of what I mentioned before. You have a certain type of product iterations or product progressions, and A/B test events or A/B test audience conversions on what you could do on these step up. For example, maybe they have to reach 100 users on their platform before they could actually move on to the next iterations or the next progressions of your product. Then just focus on helping them getting the 100 audience, or give them like a toolbar on showing that, oh, okay, you have 90 audience now, you have 100 audience now, and then when they reach 200, you can convert them into a different functions of your product or features. So stepping up is also something that you work on your product level, but as well as your monetization level. So I know we're coming to an end or coming to the end. Some of the last notes that I have kind of like thought about the last couple of months, and I've done this presentation before for another program, but some of the things that I have added later on and is my recent kind of understanding is that I've seen a lot of companies who are coming to pitch or who we are working with talking about, how do I grow? Where do I spend my money? And I know spending money is probably something that you guys are thinking about top of mind to do growth. But if you're a seed stage company, or if you're a pre-seed stage company who are looking to raise money or having the need to raise money, I would strongly advise you to not spend any money on marketing or growth before you can find your organic users. Not because I think organic users are better, but I don't think I don't think doing growth and spending money day one will help you get any tractions that people would think or respect, especially if you're raising money in the market to raise money. So I would strongly advise you to focus on just finding organic users, no matter what, no matter how attractive on your other competitors are doing, like Facebook ads, or they're doing Twitter ads, they're doing influencer ads, or doing influencer sponsor. Just find your organic users and understand why they come to your platform. They might not be spending the most money, but they definitely have an eyeball on your product, and it's where you can kind of like continue find out why your product is more unique than others. And raising money is not going to help you. Finding your competitive advantage or finding your edge is going to help you. And second of all, this is especially for the companies who are thinking about business model or thinking about raising money from VCs. Is a tough, I would say, truth is that not all companies should raise from VCs. Some companies is not meant to be VC, investor, company is not meant to be VC backed company. What do I mean by that? Most of the VCs out there, they are looking for a 50 to 100x return for your company, or for any company that they invest in. Any company that they invest in, they have to underwrite, a venture home run return, because they're in the business, especially the very early stage VCs, right? The pre-seed, the seed stage VCs. You have to think from their mindset is that, okay, they're investing in 50 companies. Let's say there's a 99% chance fail. I'm really betting on that one company to make me all my money back, or potentially two companies that I would be having a home run, so I could have a return for my LPs. So that's what they're thinking. If you're pitching a VCs, that's what they're thinking. And if you're a business, and I've seen a lot of business who are thinking about, oh yeah, I'm going to make 100,000s per month, and I'm going to make 1.2 million per year. That's really good. Like, especially a lot of the founders, they're like, oh yeah, I'm making a lot of monies. But at the same time, right? Can that money convert into 100x return for your VCs, or for the investors that you're raising money at? If you think your business model could not net that amount of money, then maybe what you should do is first try to bootstrap this company, or first try to make money first to sustain the company until you find different side of features or the products that could have this exponential growth, or could have the VC return that people are looking for, or investors are looking for. If it's not that, I mean, it's never bad to just make $1 million per year if you're bootstrapping. If you're a founder yourselves, right? If your business could make that amount of money, I would say I'm very happy for you. And it's not a bad operation as well. And it doesn't mean if you can't raise any money from external party, it's not, it doesn't mean that you're failing. It means that if you're making money and profitable, it means that you have a business right there. It's just not a venture return business. So I would say, as you're thinking about business model, as you're thinking about returns, you could also kind of select on, okay, is this something that I should talk to VCs about, or is this something that I should kind of like talk to my close friends and family about on making a potential, profitable business? So I think that's kind of like my last notes for today. And, I left some time for Q&A, but I think you guys have, different things going on. So if you wanted to reach out and ask me more questions, I could be, find on Twitter, or, maybe a Discord channel. So, I'll make sure you guys have my informations. And yeah, thank you for your time today.
Thanks, Anthony. Appreciate it. Thanks for your time today as well, and sharing all of this insight with the audience and with us as well. Just a quick question. I mean, before we go and before I wrap it up, I mean, where can developers, builders, or anyone interested, find more kind of information and insight into this stuff, when they are going through the initial stages of building and getting to that next stage?
I think, for a lot of the founders and builders out there, your product are not likely the first one in the market, or maybe it is, but there are adjacent or substitutional products out there. I would say the first thing that you need to do is understand other competitor business model first, and see if it makes sense for you as a user, and see if it makes sense from a profitability standpoint in the long run. So studying your competitor is first. And from there, you can kind of derive, okay, what kind of innovations can I do in that business model? Or is it right? And sometimes if it's not broken, then you don't need to fix it. So I would say study your competitor is, the first way to do. And second, interesting enough, is once you have some hypothesis, or once you have some kind of assumption that you wanted to test out, just roll your business model out. It doesn't actually matter if you change your business model. There's multiple business or successful business that, like have pivoted in terms of their business model multiple times. And the most important thing that you can get or learn out there is not from any of these kind of like articles or blogs or whatever. It's actually from your users, because the most honest feedback that you can get is whether someone pays for your product or not. If you can't get that, you can actually make a business. So I would say study your competitor, try it out. Or, in the interim, if you don't want to be that extreme, talk to your users, right? Ask them about, okay, we're charging you this right now. Would you sign up for the product? Or would you, how would you sign up for the product? And give them that option to kind of give you the reaction feedback instead of asking them like for comments. So that would kind of already give you like a good sense on understanding whether they would be willing to pay for a product, or if the reaction is not, why. So I would say those two strategy always work really well. And business model is not as complicated. I would say unit economics is very complicated, which is controlling your, like I mentioned, controlling your costs, and also understanding how you do monetization from funnel perspective and maximizes your LTV.
Yeah, fantastic. Makes a lot of sense. Perfect. All right, well, let's wrap it up there. So, thanks everyone for joining us today, and a very special thank you to you, Anthony, for sharing this insight into designing a winning business model. And we really do appreciate your time and effort for bringing us such a wonderful workshop today. For everyone in the audience, please make sure that you visit DoraHacks.io and submit your builds to the Polygon Hackathon, as there is 6 days left to submit. So you still have a bit of time. On DoraHacks social platforms, we do have a range of sessions like today's coming up in the future. So if you are interested, please make sure you follow us on Twitter, join our Discord, and also follow us on YouTube and Binance Lives to make sure you don't miss out on anything. And also, Anthony, if you did have your Twitter handle, feel free to drop it, and people in the audience can feel free to follow you and get in touch as well. So thanks again for joining us today, and we look forward to seeing you soon.
Thank you. I just dropped my Twitter handle and also Newman Capital's Twitter handle as well. Follow, ping us if you have any questions. My DM is always open. If you have any projects that you're thinking about raising money, feel free to reach out to Newman Capital as well, or myself. And I'm looking forward to meet you guys virtually, in the future.
Fantastic. I'm not sure if anyone can see what Anthony has put here, but his Twitter handle is Anthony X Cheng, and then the Newman Capital one is Newman Capital VC. So if you guys want to follow, feel free to do so. So thanks again, guys. Appreciate your time.
Thank you. Bye.
Thank you. Ciao.